Good morning, this is Anka Metcalf with TradeOutloud.com. Welcome to my pre-market game plan for the major future indices, gold and oil for today. It is Wednesday, it is May 17th, and it is 8:55 a.m. Eastern Time. So let's take a look at the market. We started the correction last night, and right from 6 p.m. Eastern Time, the price revisited a prior support area, but I just want to put the daily chart so you would have a better understanding of what I'm talking about. We have been talking about this excessive move to the upside, that literally most of the price action happened overnight, and then the New York session, the New York session had very tight parameters. So this is the first time when we're seeing a big red bar in the market, because up to now we've seen a little bit of a pullback, and then we've seen these hammer candles showing up. We've seen these shadows coming through these candlesticks, which mean that every single dip was being bought. So you can see very well right now that this is the first considerable sell that we're having in the market. And in terms of relative strength and relative weakness, they're all on the same page. So there's synchronicities throughout the indices, which mean that they're most likely to move in sync throughout the day today. And they have been moving in sync through the overnight trading session. So the Dow is down 132 points as of right now, with a 0.63%. The S&P is down over 15 points, and it's down 65%. So I could 0.65%. So you could see that percentage-wise, they're the same. And Nasdaq right now is down 36 points, and it's down 0.63%. So they're moving all in sync. They're moving at the same pace. So you can see right now that there's an acceleration to the downside. We just triggered this daily sell that happened. We do have room to continue lower. Keep in mind that where the price is trading right now at 56.80, where it seems to be bottoming out for the last 2 minutes, you could see why the price is creating this this shelf over here. It is from the prior candle low. We still have room to continue lower into the 56 area, and then once again into the 56.37 area, and that's going to be support for the Dow. Now, I'm sorry, for Nasdaq. All right, and now moving to the hourly chart, where we can see here that in the last hour we have been moving south. We're testing an area of support right here, so bounces can happen off this area, especially that we've had a hard sell rally that happened into 8 p.m. Eastern Time. And then we had a mild pullback into the European session, and then we're having a flush back down into the support area. So what price action is telling us that once it has reached this prior area of support, it was bought. And then once again, we had a flush to the downside into the same support areas, and we might expect some short covering into this area. However, we will be looking for weakness. We will be looking for a pullback in this area. Most probably the pullback that we're going to look for is 56.90, between 56 and 87, 56.90. And on a break of the 83 level, we will look for a continuation lower. This is going to be the big area right here that we've been talking about from the daily chart, the 56.80, and we still have room to continue into 56.70, 56.60. You could see right here 56.57 is a strong area of support. Now, keep in mind that when we have extreme rallies like we've had in Nasdaq, the price will come lower, but at the same time on the daily chart we do have some obstacles, and we do have tons of obstacles in our ways, because we've had these ascent and we have created these shelves of support from which the price has bounced. So now we're going to be looking for these particular areas to be breached, and we're going to go little by little. Let's not forget that the overall trend within the market is extremely short, and I would be more aggressively short into the 56.37. That's going to be the area where the price is literally going to reverse. The weekly is going to kick in with a weekly sell, and that's when we're going to be more aggressively short. By looking at the market, and by looking at what gold is doing, and by looking what the bonds are doing in the market, this is a pretty good indication that when I'm looking at the market, I'm looking to short the rallies that are happening within these indices. And now let's move on to to Dow. All right, so Dow, this is the hourly chart, very organized selling. From the daily perspective, I just want to show you guys, we are into support right here, so we're not going to be overly aggressive. Keep in mind that if we're going to get a sell that is going to happen on a pullback into the 800 level, the target is going to be into 760, so there's not going to be a lot of follow through that is going to happen over there. This is a strong area of support. The key here is the weak consolidation at the 750 level, a weak consolidation at the 50 at the 750 level can take the price back down into the 20,600. So going back to the hourly chart to determine the game plan for today, keep in mind support area from last week's Thursday's trading price action, 20,750 approximate area. So any bounce should be shortable today. We have developed a downtrend on the hourly chart. We have falling tops, falling bottoms right now. Although we are into support right here, look for a breach of this support level. Let's take a look at the S&P 500 index and the S&P 500 index. Like I said, they're all moving in sync. Going back to the daily chart so you understand, 2375 is the support area. I actually tweeted last night on the Trader Lot Twitter feed these charts and talking about this sustainable area 2375. If this area is going to be breached, there's more downside to it, at least in a first phase into 2360. Secondary area 2353 and 2350, 2353, 2348 area, and back into the bottom of the base into the 2324. So once again, we will look for a weak consolidation at this level, and we're going to look for to short any bounce and any formation, any cluster into a small time frame. Keep in mind, not very aggressively short because the Dow is already down as of right now 150 points. So, and also the S&P is down over 17 points. So we have been having this sell-off that happened overnight. So we have to be very cautious into the first 15 minutes of the trading day. Let's move on to gold. Gold has been reacting very bullishly. It has reached an area of resistance right here at 1252. We did have a swing long, however, we took profits on it as the market was continuing higher. Gold was weakening, and then again, gold has the potential to run into the 1260 area. We see these peaks over here, as in fact it has the potential to run into 1264, and the next target is going to be 1272, 1280, and back into these prior highs into the 1300. Let's take a look at oil, and oil has been very interesting. Yesterday we had oil numbers API 4:30 p.m. Eastern time, and today, don't forget, we have oil numbers again that are coming in at 10:30 a.m. Eastern time. So the game plan moving forward, support area at $48. This is the daily chart, and we're having a bull sandwich. Yesterday we triggered a daily sell, we did trigger a daily sell, and the price came exactly to the $48 area. However, strong reversal that happened overnight. We're going to shift to the hourly chart, and right now we're back into this congestion. $49 prior cluster support level, now resistance. If we break above $49.30 is going to be the first target, $49.50, and then we're going to look for this high of $49.65. On a reversal here, you could see that the hourly charts are a little bit whippy as of right now, and we have about a 30 cent risk. That if you're trading with one contract, that's about $300 risk. So this is the cluster that is developing right here on price weakening. We are still looking at a descending pattern. We have 3 lower highs as of this point, and a break below 70 can bring the price back lower into the $48 area. And now let's take a look at the bonds by popular request. All right, so the bonds, and I'm going to bring the daily chart up right here. The bonds have been creating a bull sandwich at this level of 150, 120, burst higher into the 153 150 over the 153 level with the potential to continue higher. But careful, 153.20 is the next target area, and then we're going to be looking for a 153.30, obviously 154 area, and then we're going to look for further continuation into the 155. From an hourly perspective and a game plan moving forward, you could see that we had a breakout that happened at 152.08 in this particular area, a little bit of wider stop than I would have wanted, but the price the price stabilized at 152. You could see right here at the whole number, and came into the 153. So any pullback as the market is continuing, and if the market should continue to go to sell on rallies, we should expect the bonds to continue higher. And like I said, further projections, at least, and right now it is trading that the 153.06 is actually cluster resistance on the daily chart, but expect the price to follow through into 153.21, 154, and a little higher than that. This is all for now. Thanks for tuning in. Don't forget we have a new upcoming class. It starts next Monday on May 22nd. It is a 6-day power income day trading futures class, and 5 days packed with trading education, everything you need to know from A to Z. It is a course for beginner traders and also for advanced traders. We're also teaching within this course a chapter on technical analysis, and it is one of the most complete chapters that it is out there. So if you want to hear more about the class curriculum, please feel free to email me at info@tradeoutloud.com, and also you can find out more information on tradeoutloud.com/futures. We're also having a trading lab after the class, and you're also going to be following all my trades for 30 days with the option of continuing thereafter. So again, if you would like to hear more information about our course that is starting May 22nd through May 26th, and May 30th, we're having the trading lab. More information on our website, tradeoutloud.com/futures. Thanks for joining, and see you guys tomorrow morning.